report the 18th of October. Okay, so what's in store for us today? Today, talk about the report on the US debt and accelerating threat. Now, I think whenever you want to trade the anything that has to do with the US dollar as well as the US stock market, you really need to understand the economic situation of the US, and that's exactly what I'll be discussing today, right? And the US is after it removed itself from the gold standard, what it done was that it went into a debt-fueled economy. And as debt pile up, right? And if you do not have the right and necessary economic management of this debt, then it can be an issue. So lately there have been reports about US debt accelerating, and that's the reason why I want to look into it. Now, first of all, the rapid expansion of the US debt. Now, the US federal debt has risen from 9 trillion in 2009 to 35 trillion in 2024, an increase of 25 trillion in just 15 years. Now, to give you an idea of what a trillion is 1,000 million is a billion, and 1,000 billion is a trillion, right? So the debt took over 200 years to reach 9 trillion, showing the exponential growth of debt in recent years. Now, 200 years to 9 trillion, and from 9 trillion to 25 trillion is just 15 years. Okay, so federal overspending is increasing beyond projections. The Congressional Budget Office recently revised its 2024 deficit estimates from 1.69 trillion to 1.9 trillion. So this is not something I would say brush off. You just have to look into it in detail. Fiscal overview, exploding debt and deficits. Now, to give you an idea, government revenue versus spending in 2024. Revenue is 4.9 trillion, spending is 6.8 trillion. That's how you get a deficit of 1.9 trillion US dollars. Now, borrowing is necessary to cover this shortfall, adding more treasuries to the market. The rising deficit is fueled by financial aid to Ukraine, Israel, and the Indo-Pacific region. 70 billion in taxpayers funded bailouts for failing banks via the FDIC. I've talked about this in the past. Over 100 billion allocated to student loans forgiveness beyond original estimates. So this is how the money is being spent. Now, mounting debt burdens and interest payments, this is an issue as well. As of 2024, the US government is in debt by over 34 trillion. Interest payments on this debt are becoming a significant budgetary concerns. Interest in 2024, interest payments are 892 billion. And the defense budget is 849 billion. You can see how, defense budget is a big budget for the US, right? They always do that. But you can see interest payments is just ballooning, and this is one of the reasons why the US is so concerned into cutting rates fast, because as the rates go higher, so will the rise of the interest payments as well, right? So this is something that they need to work fast. So next year, interest payments will surpass Medicare spending, reflecting the scale of the debt burden. So an analogy of credit card debt: as government borrow more money, the interest payments grow, reaching a point to where payments become unsustainable. So we need to see how all this spending happens. So of course you need to look to the head, right? So if there's an argument saying that sometimes the Republicans, they spend more, Democrats, they spend more. At the end of the day, I'm just going to put it out for everyone to see. Okay, we're going to take the last 4 presidents and look at the spending. Now, both Democratic and Republican administrations contributed to record deficits. Bush increased the national debt to record levels. Obama exceeded boost deficit and debt accumulation, okay? Because he came in and there was the 2008 subprime crisis. Now, Trump coming in, he outpaced Obama with unprecedented spending and debt. And then you have Biden coming in on track to surpass Trump in debt creation. You telling me one is trying to outdo the other in terms of spending. So according to CBO, another 22 trillion in debt will accumulate over the next 10 years, bringing the total US debt to over 50 trillion by 2034. So how are they going to deal with this? So next, I'm going to talk a bit about the unfunded liabilities and future debt burden. Now, the US faces off-balance sheet liabilities from programs like Social Security and Medicare, which could add 200 trillion in future debt. Now, to meet these obligations, more treasuries will need to be issued, right? They don't have enough money, they have to print this money. Treasuries will provide them. Now, this will further raise the risk of interest rate hikes and inflation. So this you can't run as long they're printing. Don't think that this is just a US problem. Whenever the US faces inflation, this inflation is exported out of US as well, and then goes around the world. You know, think of the things right now where you are compared to like 20, 30 years ago. You know, the prices, they have increased a lot, right? And where did all this inflation come from? All these were exported from all this fiat currency, the unlimited printing of fiat currency. So if treasuries flood the market and buys decrease, the Federal Reserve may intervene. You know, not enough people buying, then Federal Reserve will buy, and they buy these treasuries to stabilize market. Now, when they start buying, this could lead to currency devaluation and more inflation, right? So end of the day, you know, of course, you want to print money, fine, but the you know, where do you want to get this money from, right? It's understandable. They need to have price inflation, and the reason why there's inflation, so there's enough taxes to cover the expenses, right? When they inflate things, things become more expensive, and you're taxed on more expenses, and that's where you get more in terms of taxes. But let's look at the US. How are they financing its spending? You know, obviously one's from tax, and the second one is the treasury bond sales. These two areas, taxation and treasury bonds. Now, unfortunately, the government collect tax from private sectors, but raises only a fraction of what it spends. It's just not enough. In terms of debt issuance, to make up for shortfalls, the government sell treasury bonds to domestic and foreign buyers like Saudi Arabia. They buy. Last time used to be China. They've been buying a lot, but China has reduced that due to obvious reasons, right? And then other than that, the domestic buyers, private banks, and foreign investors buy treasuries because they provide secure returns, roughly around 4 to 5%, right? But at the end of the day, it's just not enough. And that's why they're always spending more than what they have. So the perceived crisis here, what is the real crisis here? Is it a debt crisis or government spending? What is it? Now, despite the rising debt, the US Treasury remain in high demand. And yesterday, the 30-year, not yesterday, early this month, we had the US Treasury, right? And they, hold on, sorry. US Treasury, and everything was okay. You know, the 30-year Treasury, they practically had very, very high demand. So the US Treasuries, people still want them due to the security. Okay, and you know, even with this high depths, you can see that the dollar is rising. It's falling, but overall, you can see that, you know, it falls down to 90 plus and it goes up again to 100 plus. You know, there's still demand, and lately the dollar index has strengthened despite all this debt talks about that, and treasury yield remains low despite growing debt. because if they don't need to, the yield, they don't need to have high yields to attract buyers, right? So if they don't need, because why they don't need? Because they, with this low, even the yields are low, people still want to buy them because of the surety, the safety. So that's why the global confidence in bonds is still, the US bonds is still there. So if you look at these things, right, treasury remains high in demand and yields are low, then the issue is not about that, but the government spending which fuels economic imbalances. And don't think this is a small issue, guys, because what's going to happen is this, is that there is a crisis of wealth inequality, and that is going to be a real issue. We have seen this with other countries. When they had that issue, later it spiraled into something really, really bad. The current economy resembles two extremes. For those holding a lot of money, it feels like the roaring 20s or the 90s with increasing wealth and opportunity, right? In the past, we talk about millionaires, and recently, and the last 10 years, we talk about billionaires. Soon, we will have trillionaires, very, very soon. In fact, there was already an article in the news portals saying that there's a probability Elon Musk will be the world's first trillionaire. So unfortunately for the middle class and poor, it feels like an economic depression akin to 1930s with inflation eroding purchasing power. Now, the widening wealth gap is becoming unsustainable, with more Americans struggling to rising living costs and shrinking of economic opportunities at the end of the day, and these can create social unrest as well. So at the end of the day, conclusions and final insights, the real crisis lies in government spending rather than debt itself. As long as global demand for treasuries remain, the US can continue to issue debt and sustain spending, worsening economic inequality. Now, if there is a drop in confidence on the US dollars, it would be even worse for the US. So without fiscal discipline, the US risks becoming like a third world economy where the poor struggle while the wealthy thrive. So this is something that could happen if this thing goes on and on and on. You know, there is a adage by the Chinese. They say that, the paper you cannot wrap fire. So that could actually happen. So with that, that's a report for today.